If you look like an emerging market country, Argentina, Turkey, where the currency is under pressure, and the only way to stop that, if they're running, if rates are too low, currency will continue to decline, inflation will
Mhm.
continue to go up, and the bond market of those countries will continue to sell off. To stabilize them, they have to raise interest rates to make it clear to people they're good stewards of their currency.
Yep.
All right. Now you may say, well, gee, George, the dollar hasn't gone down that much. Yeah, it's gone down. I think this past year's down 8-9%, I think, on a trade weighted basis. So that's beginning. But what's more interesting to me, trying to figure out the dollar's going up against the euro, down against the euro, who the heck knows? As I mentioned earlier, all fiat currency has this problem. So it's the devaluation of fiat currency, all fiat currency against real assets. That's why scarce assets are doing well. Precious metals, interesting in my view. Some people prefer Bitcoin. We haven't seen this before. And then my friend Louis Gaff from Gavcal talks about, are we going Turkish? Because when you have debt, too much debt, there's a couple ways you can get out of it. You can either have a hard default. Well, not going to happen with U.S. government debt. Or you can have a soft default. We'll pay you back. But as Alan Greenspan famously said a couple decades ago, I can assure you we'll be able to honor our entitlement commitments, but I cannot guarantee you what the value of that money will be that will pay you in.
You'll get
So
monopoly money.
monopoly
Yeah,
money,
yeah,
which gets back to, it isn't even so much about making money; it's preserving your wealth in real terms.
yep.
That's a challenge which I've not seen in my career,